please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, this morning, the Asian markets are a bit under pressure, tracking the losses that we saw on Wall Street. A couple of these markets like South Korea and Thailand are shut for holiday, but the others are just a shade of red. In fact, deep shade of red across Japan. It's down 350 points right now. But our research team is here to give you the list of stocks that you need to watch out for as you head into trade this morning. So let's welcome our entire team. There you can see them bright and early. Anuj, what are you looking at today?
Yeah, so Sonia, before that, just to extend the point that I made, especially on the bank Nifty, the point I said that today maybe you want to buy from the lows. This is just about the day. Overall, there is quite a bit of weakness in the market, and that should not be mistaken. For today, I think you should focus on stocks which are doing well. MRF, for example, it's a stock within 1.5% of lifetime high, and commodity consumers are doing well now because globally you've seen a bit of a slip in commodity prices. So tire prices are, rubber prices are down, crude prices are down a bit. That may help stocks like MRF. I don't know how many times I've spoken about this, Ashok Leyland. Again, 100 crores of delivery buying yesterday at an all-time high. Strongest F&O stock in a bull market of its own. And if you see the 52-week high and 52-week low of Ashok Leyland, 52-week high, of course, was yesterday. 52-week low was exactly 52 weeks back. So essentially what that means is that 52 weeks back, that price would have been its 52-week high. But because now you just moved on, that 52-week low is only because you moved 52 weeks from there.
So year after year, it's making a new high.
Exactly. Yeah. So could we be looking at a case where 52 weeks from here, the 52-week low is 141? I mean, that's what Ashok Leyland has done over the last 4 or 5 years. So this one clearly is in a its own bull market.
Okay, that may be asking for a lot from a cyclical industry like buses and trucks. But I think the stock of the morning will be Fortis. Ekta woke up, I think it was awake till midnight for the Fortis numbers.
Yes, absolutely, Lata. Well, everybody was just contemplating on whether or not they would actually release the numbers in time, or whether they would be out of the F&O space in the next series. But they did release their numbers, and expectedly, according to a lot of analysts, the Deloitte auditors have not signed off on the Q2 and Q3 numbers, pending the probe of those intercorporate deposits of around 473 odd crores. They have also cited unsecured advances from vendors for which repayment terms have not been set. If you look at the numbers also, it wasn't anything to write home about. The 9-month FY18 revenue was flat, margin 7.5%, and there was a loss of around 20 odd crores. But the other important point is that the promoter holding is down to 0.77% for the particular stock. So that would be something that always cites interest for the company.
Okay, Ekta, thanks a lot for that. The only reason I stay awake till midnight is if there's a Manchester United match, not because Fortis is
blessed are you.
Anyway, Lata, the GDP numbers and the impact on stocks?
Yeah, and there were positive stories definitely in terms of the gross fixed capital formation number that Sonia was pointing to, 12%, construction 6.8%, and separately the core sector numbers showed that cement has grown by over 15% year on year. So you can accordingly expect all those stocks, say L&T, or cement companies like Ultratech or the Ambuja ACC twins, all those to do well. But consumption was the negative story of the GDP number. If we thought that that's just taking off, the GDP numbers told us it's not really taking off, and those are already expensive stocks. So keep a watch on the likes of Hiromoto and Whirlpool, any of the consumption stocks. Those that look pricey, people may want to reassess whether the consumption is so good.
What about this manufacturing sector number of 8.1%? Does it indicate that the capex cycle recovery is at least seen a bit?
No, that manufacturing plus the gross fixed capital formation and construction all put together indicates that there is good activity. So, yeah, I mean, all these have a base advantage as well. But clearly, yeah, I take your point entirely that all that shows that capex. That's why I pointed out to L&T.
The L&T, yeah, okay. All right, talking about the capex cycle pickup and new orders, etc. Ashoka Buildcon is also on our radar. Anisha is going to tell us why. Anisha, over to you.
Well, yes, so JV of Ashoka Buildcon as well as Macquarie has backed the first TOT projects on the toll operate transfer project worth around 9,700 odd crores. Now, since the size is too big of 9,700 crores and this is the first model, give me a second to explain how TOT works. So, actually in toll operate transfer, the companies pay a lump sum amount to NHAI upfront, and they get the tolling rights for the next 20 or 30 years. In this case, it is around 30 years. Now, 9,700 crores, the equity portion of this order will come from Macquarie, and that is why my guess is that Ashoka Buildcon will just operate and maintain these assets and will get only a small small part of this 9,700 crore chunk. We'll try and get more details from the management, but definitely a positive. However, the street might just question companies' logic of going into TOT because they essentially make money in the EPC part of the business. So these things need to be worked out. But since it's the first project and the company has bagged a sizable order, it will be in green today.
Okay, Anisha, thanks a lot for that. Well, this month has been all about IT stocks. Of course, Mindtree is up 33%, but from the index, Tech Mahindra is up this year 21%. Infosys is up 12.5%, and Lata, that should continue today with the move in the currency.
Yeah, we already heard the Mohan Shenoy quote. You are going to see the rupee move towards the 65.50 mark. That's not just a sentiment positive. It is good for India. We were an unusually strong currency, not called for. This depreciation is welcome. It may show first on the IT stocks, but it's generally good for the economy.
Okay, generally good for the economy. Getting back to some of these infrastructure, power names, etc. Anisha, why are you watching Reliance Power today?
Well, so if you remember, the last week the company announced that they're looking to get into a QIP, and now the board meet has happened, and they've decided to raise around 2,000 crores worth through the QIP placement of equity or equity convertible, various instruments for that. Now they're waiting for the shareholders' approval to come by, and this will entail a sizable dilution for these shareholders because remember, 2,000 crores is almost 16-17% of the current market cap. They say they are going to use these funds to reduce the debt and put it into general corporate purposes. But let's see what the price is decided at and how the shareholders react to it. Back to you.
Okay, thanks a lot for that. A few more stocks you want to wrap up, Sonal?
Yeah, I'll start with MOIL. The stock will be in green today. Well, they have increased prices for different products effective 1st March, that is today. So for manganese ore and SMGR and chemical grade products, the prices have been increased by 10%. And for prices of fines, they have been increased by 5%. So that is positive for the company. Another stock that I'm watching is Dalmia Bharat because CLSA has initiated a coverage with a buy and a target price of 3,500, which is 33% above yesterday's closing price. They think that the company will be able to grow their EBITDA by 16% and EPS by 15% over the next 2 years, and they think that the company enjoys leading EBITDA in the industry due to a better blending and fuel mix, also because they have been able to turn around the acquired assets in a very good manner, and also optimization of the lead distances. So expect that stock to be in green today.
Okay, thanks a lot. Here's a quick recap now of all the stocks that we're looking at today. Expected to gain are some of these auto ancillary names, MRF, Ashok Leyland, infrastructure, of course, because of that number that came through, L&T, Ambuja Cement, Ultratech Cement. The cement numbers were so strong. Ashoka Buildcon, Reliance Power on the new orders, TCS, Infosys, Wipro, MOIL and Dalmia Bharat. While stocks that could be under pressure this morning, Hero MotoCorp, Whirlpool and Hitachi.
Well, actually a whole host of consumer stocks. I just picked 2 or 3 of them. And of course, weakness because of the global cues. So we will get to all that when we have our technical experts. For the moment, the latest from the tussle that's brewing in the telecom space. Bharti Enterprises Chairman Sunil Bharti Mittal reacted to the telecom regulator, TRAI's latest order on predatory pricing. In an exclusive conversation with our colleague Megha Vishwanathan on the sidelines of the World Mobile Congress in Barcelona, Sunil Bharti Mittal says Bharti Airtel will challenge that order as that's the only option they're left with.
Telecom industry has been into a lot of litigation. Unfortunately, I hope that the regulators and the governments see all the litigation that is sitting in the telecom industry and lower the cause of litigation. On this one, we have heard the regulatory chairman to say legal recourse is welcome. So I don't think so there's any other choice here.
So you will jump onto the legal battle, sir?
I don't think so there's any choice because you can't be in the market with your hands tied up. So I think a legal recourse is inevitable.
All right. Another thing that I would like to get your comments on is that one of the reports that was done by an independent network, which is Open Signal, stated that India has one of the lowest 4G speeds. Not just about the developed economies, we're lower than even Pakistan. So, you know, your comments on that, are we making enough investments towards speed, or is everyone focused on just capacity?
No, I personally, I mean, Pakistan doesn't even have a 4G network, so it's not that we are behind Pakistan in terms of speed, but you must keep in mind that India now has one of the largest users in terms of the data consumption. We are at 10, 11 GB a month. There are no other countries which are at that level currently. So the consumption is so high, given the lower pricing, people are guzzling, videos, entertainment, live digital TV and all that. That puts a lot of pressure on the network. But despite that, if you see the Open Signals report, they have clearly said that Airtel networks are the best performing networks in India, and they have certified that three times over now. In that context, I would say the customers are now enjoying higher speeds. As the tariffs and all stabilize, and all this, I would say, data guzzling that is going on because of almost free pricing, when that changes, I think speeds will get better. In terms of investment, I think billions of dollars are being invested to put more and more network and more capacity and more coverage.
All right, one final question on your partnership with Google on Android Go. You are planning to get that to India. We've seen many devices that have been launched right here at Mobile World Congress. What's the bigger mission here?
Well, I think our platform of Mera Pehla Smartphone is a great platform where we are bringing a lot of devices. You will see us not only launching Android Go, which is the entry-level smartphone and expands the base for smartphone. And our view is very clear: go for entry-level, good, high-quality smartphones rather than feature phones, which needs to be dropped out. And people deserve to have smartphones in their hands, especially when you have great networks on 4G. And the platform that we have built will also get high-end phones from Samsung, the new phones, Apple. All of them will be coming through. So Airtel customers will enjoy a galaxy of phones.
All right. Final question, sir, on Singtel continuing its backing for Airtel. Your war chest has increased in terms of your financial muscle to fight back. Where will we see these investments now, and what does the year look for you from here?
Well, I think it's a very strong endorsement coming from Singtel. As you know, Singtel is a significant entity, majority owned by Temasek. For them to stand behind Airtel in these difficult times in India gives a very clear message that Airtel is there to keep its leadership position.
The Hang Seng market is recovering and is now down only about 17 points. A couple of other markets are, of course, still down a bit. Let's see our own SGX Nifty and how's that trading. Shanghai is actually in the green. SGX Nifty down about 56 points. Ashwani Gujral, Sudarshan Sukhani and Mitesh Thakkar with us now. Good morning, gentlemen. Ashwani, if indeed we have a 50-point gap down, what would be the first trade today on the Nifty and also on the Bank Nifty?
Well, good morning. The important bit is that whatever I say does not apply for the whole day. So which means that by the time we close, we may not be either at the high of the day or at the low of the day. My sense is that if you take yesterday's high and yesterday's low, that should give you fairly good boundaries to be able to trade. So in case we gap down and Bank Nifty gets to yesterday's low, closer to say 24,900 thereabouts, that is where you buy. But at the same time, if you get a rally and it starts getting closer to unchanged, that's where you would again try to sell the Bank Nifty. So overall trend remains down. But half a day rally can happen anytime, because with this gap down, you now have 3 down days and just about hitting support. So from that support, you could have a mild upside rally which may not continue the whole day.
Okay, so those are the contours for Nifty and Nifty Bank. Well, Sudarshan, good morning to you. What's a positional trade now?
Good morning, Lata. Quickly, I'll tell you 3 themes I have discussed. One was that PSU banks will go down. They are going down, but that trade is now becoming difficult on the short side because they are likely to become choppy. There's much more downside, but it's a long-term positional trade rather than a short-term trade now. The second was that the USD would go up. That call was made at 63.50 and repeated. Lata, that trade is also coming to an end. We are coming very close to our targets of 65.80. Now, targets are not absolutely perfect, but the margins of rallies are now limited. Okay. So, traders should understand that. The third trade is that eventually we'll reach 10,000. That is the trade that we are looking at today. Now, today could be choppy. As Ashwini said, the gap down could actually lead to a sharp, vicious rally on the upside. It could. So, this is not a trade that we take for today. Start buying 10,500 puts. All this mess that we are seeing in the world markets in India will eventually lead us down. That's the positional trade.
Okay. Mitesh Thakkar is also with us. Mitesh, do you get a sense that the trend is on the downside, and what would the order of the day be?
Good morning. On the short term, yes, I think, we mentioned that if we break 10,500, we are likely to correct further to about 10,420, possibly 10,330. While in the Bank Nifty, we could retest that big support zone around the 24,820, 800 mark. So I think that might happen. The bigger trend will open up on the Bank Nifty if we start getting a close below 24,800. So in that sense, I think for the time being, we will be looking at the market reaction post opening. If we open around those support levels and don't see follow through, then it might be a good time to take profits on the short side and then wait for 24,800 on the Bank Nifty to be taken out on closing basis and then go aggressively short.
Okay. So that's the magic number that all of you are watching, 24,800 if that's breached. Okay, Ashwini, stock-wise?
See, now again, at lows you try to buy and at highs you try to sell. So Bharat Forge is a buy with a stop of 780, target of 815. Ashok Leyland is a buy with a stop of 138, target of 150. ICICI is a sell with a stop of 317, target of 305. Axis is a sell with a stop of 535, target of 510. And Capital First is a sell with a stop of 672, target of 650. Now whatever happens, I think given the headwinds, now growth is also picking up, so no more rate cuts. And that way financials will remain a theme that should remain under pressure. So look to short on all rallies on financials.
And take your point, actually yesterday you had the SBI deposit rate increase as well. So the cost of money has gone up. But that usually impacts the housing companies because they have bigger asset liability mismatches. Anything from that set on your radar, Ashwini?
See, Capital First is there, DHFL is already started to fall, India Bulls, housing, etc. If overall, cost of money is going up around the world, I think financials will not have a good time, and that is why most indices are falling the way they are falling. Because most places, financials make a major part of the indices.
Oh yes, in fact, India Bulls Housing Finance this month is down 10%. Used to be the strongest index stock, but obviously the the macros have changed. Now, Sudarshan, good morning. You also have 2 buys and 3 sells. In fact, all of you have that. Your list, Sudarshan?
Yes, the sell, Andhra Bank, the PSU Bank decline is going to continue, but we are now selling in the yesterday's rally. With, of course, the gap down will change things, but still it's a short sell. LIC Housing Finance is a short sell. You've just talked about housing finance companies, and that is the theme that we are also looking at here. It's not just LIC Housing, probably across the spectrum, but this one is the weakest of the lot, so it's an easy short. Dish TV is a short. It's come to a lower end of its trading range and is now willing to break on the downside. So PSU banks, housing finance companies are underlying themes. Any rally, any breakdown, go and short. I have 2 quick buy ideas. One is DLF. Real estate is now outperforming. So while the markets will gap down, there is a strong chance that DLF's gap down should be bought into and could rally during the day. And the second is Jubilant Foods, same story, very strong stock. This gap down is actually an intraday buying opportunity.
Okay. Mitesh, what about you? What would you buy or sell this morning?
So as Anuj highlighted, I've got 3 sells and 2 buys. On the selling side, Bosch has had a swing breakdown, so sell with a stop at 18,900. Look for targets of 18,200. Shree Cements had fresh intraday sell signals towards the close, so that's a sell with a stop at 16,850 for targets of 1600. And Z had some indicators crossing negatively, suggesting further declines. That's a sell with a stop at 576 for targets of 545. And 2 buys. Apollo Tyres had a good price volume breakout, so around 272 it will be a good long trade with a stop at 265 for targets of 286. And Bharat Forge, I think Ashwini also highlighted, that's a buy around 780 to 780 mark with a stop at 767 for targets of 805 to about 810.
Okay, Ashwini, I noticed that you have buy on Nifty IT. For large cap IT, is there anything that you would want to bet on today?
See, large cap IT by turns, TCS, Infosys, etc. should go up. But I think the bigger story is in the mid caps where you'll get a bigger bang for the buck. A sharp rally happened. Post that, there was some correction. Now, all of these guys, NIT Tech, Mindtree, Sonata, etc., all of them are now rushing up. So, if people have to buy something on these gap downs, these are good stocks to buy into.
Okay, just my bit as well. Anything on the Titan and PC Jeweler kind of stocks? Well, Sudarshan, is there any short idea over there?
No, PC Jewelers and Titan are both short selling opportunities. They don't have a setup today, but if you are looking for a theme, both are only to be traded on the short side.
Okay, well, today another cue that we're looking at is in the auto sector. You have the auto sales numbers that will come out today. Remember, last month was a very, very strong month for the sector as a whole, and we have the base effect because of demonetization, so that will continue into this month as well. A couple of key stocks to look at. Of course, the commercial vehicle sector is going to have another very good month, so Ashok Leyland, etc. Are expected to rally. Remember, retails were impacted a bit. There were a few inauspicious days this month in Gujarat, Maharashtra and Rajasthan, so retails could get impacted a tad bit, but otherwise, stripped of that, the numbers are expected to be very strong. In the two-wheeler space particularly, you had good exports and good three-wheelers, so Bajaj Auto, TVS Motor, etc. will look very good. Sudarshan, a quick word from your end. Generally, we see, a lot of the auto stocks rally post the numbers coming in. What would your top favorite be here?
Well, it's still Ashok Leyland. Wait for a minor dip and buy Ashok Leyland. I'm not upbeat on the other stocks.
Oh, really? Mitesh, any of the auto stocks other than the commercial vehicles, two-wheelers, four-wheelers?
No, I think I would also want to place my bets only on Ashok Leyland.
Okay. Well, there are lots of cues to analyze. There are global cues and, of course, those big GDP and core sector numbers, which, of course, is growing economy. So let's put all these things to Sandeep Shenoy of Pioneer Investcorp, who has joined us in the studio. Morning, Sandeep. Thank you very much for joining us. What's your takeaway from the GDP numbers? Will you buy or sell anything because of those numbers?
Well, I think we seem to have come out of a trough decently, and whether we are on an uptrend or not, I think that's a different question. But if you look at the entire landscape globally, I think, like it or not, India is one of the shining stars left on in the entire zone where you have got too much of turbulence. So I guess money flow towards markets here is definitely not going to abate.
No, but which kind of stocks? After all, we saw a very good capital formation number. We saw good cement numbers coming in from core sector, good construction numbers coming from GDP. So does that attract you towards that kind of stocks, infrastructure, cement, construction?
Well, I think cement is definitely one of the sector where we should be invested, probably the second and the third rung stocks. I know you take strong objection to the word pricing discipline, but I think the sector is seems to have tided over the entire turbulence of the last 2-3 years commendably. So you are going to see some kind of a good flow numbers coming in, especially South India based players. Construction, yes, I think you have, but the options for an investor on a medium be few. But if you latch onto the right stocks, especially those who have got a lean balance sheet, who don't have too much of a problem of on the debt aspect, I think we are going to make a decent amount of money. But one has to be mindful, Lata. I think strong valuations always come when institutional money starts chasing stocks. And we don't have institutional grade stocks in the construction sector right now. There are very few, but they are not exactly noteworthy stocks. So I think it will be quite some time before construction stocks become what we call as in the shopping list for most of the institutional players.
Sandeep, good morning. Are you buying PSU banks, PNB or anything else?
Well, I think you have to be a hoping against hope trader, Anuj. Yes, prima facie on apparent basis, they seem to be value for money propositions, but then they were the same 6 months back and a year back also. Well, the BFSI is right now was before the entire carnage started somewhere close to around 38-40% of the entire market cap. So they were straining at the seams. Now you have got a walloping coming to the PSU banks. Some brave hearts may try to venture in, but I think if you give it a pass at the current juncture, you may not be a loser.
Okay.
But what part of finance at all will you buy?
Well, Lata, I think, like it or not, you have to go where the large money will be coming in. I think that's coming at the upper end of the spectrum, and they are not cheap. In fact, they are slightly costly, or maybe some of the stocks could be usuriously costly. But unfortunately, they are going to be the ones who are going to be attracting the money. So if you are going to benchmark your portfolio against the index, you can't avoid those stocks. So otherwise, as a lay investor, I would say you are not going to lose too much if you avoid the entire BFSI sector, because though they are 40% of capitalization, the rest 60% can still give you better opportunities.
Oh. Okay. In terms of, sectors, the one sector that everyone's talking about is IT. And in fact, we've seen a lot of mid-cap IT names come back into action. Infosys is almost back at 1200. Are you looking at this space for buying now?
Definitely. I think most of them went through very trying or a challenging phase for almost anywhere from 1 year to 6 years, whichever way you look at it. And I think most of them have remodeled or rekindled their business model extremely well. And I think US also, the entire poison is out in the open. You know what are the problems. So it's all known. There is nothing unknown there. So you are going to get some kind of a business traction on a revenue front. The large ones definitely will give you some kind of a, you can say, slow and steady gains. But you know, I think the bets would be more on the second rung and the third rung ones, because they have a high degree of optionality and they could show some kind of a step up re-rating, and that's good for a medium term investor.
Okay, by the way, the Asian indices are doing well now, and a couple of them have moved into the green. Let's just pull out Hang Seng. That's actually in the green. Shanghai is up about 11 points. Ashwini, does that change the hypothesis for the morning?
As the market opens, but obviously if we move towards yesterday's high, then the short trade is also on. So the buying has to be done closer to yesterday's lows, not at gap up.
Okay, well, Chandan Taparia of Motilal Oswal Securities is also with us. Chandan, hi, morning. In terms of individual stocks, what would be on your buy and sell list today?
Yes, we are expecting some volatility, and Nifty may got stuck in a range with limited upside as per the cold writing activity. So selected the stock. First trade is buy on Infosys. We are expecting positive momentum in most of the IT counter, and most of the IT stocks have seen positive price action with built-up of long position, including Tata Elxsi, Mindtree, Infosys. So recommending to go long on Infosys. Looking for an upside target recent high of 1280. One can buy with a stop loss of 1150. Second trade is buy on C8. We are expecting some bottom formation in the counter after the decline of last couple of weeks. It has seen some consolidation move and expecting the positive stance led by short covering activity. So one can buy with a stop loss of 1572 for an upside target towards 1685. We have two sell trade as well. First is sell on HDFC Limited. As per the price pattern, it seems that NBFC and the banking stocks are likely to witness selling pressure. HDFC Limited has failed to surpass immediate hurdle of 1852, and given the lowest daily close in last 11 trading session, it is slipping below its 50-day exponential moving average and has potential to go towards 1760 kind of level. So one can sell with a stop loss of 1834 and look for the downside decline of 2 to 3% in the counter. The second trade on the sell side is MRF Finance. The stock has recently formed a triangle pattern and also had to give the breakdown from its triangle. So more weakness could be seen. One can sell with a stop loss of 443, and the stock has potential to decline towards 420 levels.
Okay, Chandan, thank you very much for joining us with those picks, and have a great weekend. This time we have a long and colorful weekend ahead of us. Well, Sandeep, clearly you're not the only one selling finance stocks. All our experts were calling a sell. But you gave us one big cue that you can, you know, even if you didn't look at the 40% which form the finance stocks in the indices and play the others, now what gives you value in that remaining 60?
Well, I think, as Sonia rightly mentioned, IT is definitely going to be one of the outperformers, and maybe in H2 of this calendar, you could see healthcare also coming in. So they have a decent amount of market capitalization weightage, which could give some kind of a good option for a longer term investor. Oil and gas is another sector where I think after some kind of a steadiness or being off the radar for a longish period of time could be in on the buying list. And if you move that up, auto is definitely going to be a trader's market. It's not going to be a unidirectional market. But yes, I think you are going to get good 25-30% kind of a move. And it could serve well for a trader who is trying to move in and out of a market. It's a different set of investment strategy, but I think options will be also there. So I think that kind of gives you both large liquid names and also good kind of optionality and investment ability.
But within autos, what would be good for trade? I mean, will it be the two-wheeler names? Are you looking at the commercial vehicle names?
I think, Sonia, right now the advantage is really auguring to the commercial vehicle guys, and each of the player has got some of the other thing. One has got a turnaround, one has got a scale up, one has got being in the right place at the right time kind of a situation. So I guess when it happens and all three of them get individualistic, you can say tailwinds which are in their favor, I think you would get good trading moves.
Okay. Well, generally, what's the view on indices itself? Are we going to see large caps do better than mid caps? And within the large caps as well, it's only relative outperformance, but as a whole, you know, we should be prepared for even a 4-figure Nifty.
Well, I wouldn't be that pessimistic, but yes, there's always an outside chance of that happening. But Lata, one has to be again mindful of the fact that froth is slowly going out of the system. And when deep pocket investors come, they generally trend to large cap stocks. So we could be in for a phase where indices are showing some kind of a inching up slowly and steadily, but portfolios which have a strong mid cap bias could be on a downward trend. So that's a situation which could create a larger amount of flux in the markets than headline numbers of the indices moving up. So I guess now it's advantage large cap stocks at least for a couple of more quarters.
Okay, let's do one thing. We'll take a break. Up next, we have pre-opening, and things are looking interesting because Asian markets have moved into the green. SGX though is still indicating a bit of a downtake. We'll be back with pre-opening.